Welcome to the Apartment Guys, where we dive deep into all things multifamily investing. Our mission is to educate, inspire, and empower real estate investors to reach their highest potential. Each week, host Tate Seamer interviews high-level guests from all over the industry who are sure to bring valuable, actionable ideas that will propel your career to the next level. Whether you're just starting out or a seasoned investor, you are in the right place. And now your host, the Apartment Guy, Tate Seamer.
Apartment Guys Nation, what is up? Another one of these coming at you, and today is really going to be fun. I'm hanging out with a buddy of mine named Andy McMullen. Andy Mac in the house, and we're talking about capital raising. It's kind of been an overarching theme of the last month here at Apartment Guys. Every episode we talk about capital raising from a really different perspective today. Andy and his partner Ruben Greth, who's been a guest on the show and is also a buddy, they are working a fund, meaning they're raising capital for an ongoing fund that invests in different real estate deals, apartment deals, right? And multiples. So basically you put 50 grand into this fund, that 50 grand is going to be used to invest in one or two or three different projects, and you're essentially diversified. And it's just a different way of financing projects, right? And there's advantages, disadvantages, and we get into those. And I think you'll enjoy this conversation. We get into a lot of other stuff too. Andy's just a great guy, from the heart kind of dude. And I hope you enjoy it. And speaking of from the heart, we are really excited to be the new owners of a 51 unit community in Oklahoma City, Oklahoma. And it is currently called Mariposa, but it's going to be called The Edge. Yes, The Edge. Actually, I think it's Edge at 23rd. So not The Edge as in the guitarist, but Edge at 23rd will be the name of the community once we convert it and renovate it and really like put some TLC into it and breathe some life into it. It's going to be awesome when we're done with it. I cannot wait. We're involved in 3 other communities right now. We're under contract and moving through the due diligence process on 3 separate communities, that 2 in Oklahoma City, 1 in Columbus. And we're, again, like cooking. There's a lot going on here at Greenlight right now. If you want to stay abreast closely to what we're doing and possibly even look at partnering with us, you can go to investwithgreenlight.com. And there you can schedule a consultation with me, which is the best way to get started in this realm. And we can talk about all things related to multifamily investing, from the very basics to the lots of advanced stuff, and what we're doing in particular with our communities, kind of how we invest, what our philosophy is, what we look for, and how we serve our residents and how we serve our investors. So yeah, investwithgreenlight.com. Check it out. Without further ado, Andy McMullen and myself coming at you. Enjoy. Welcome everybody back to another episode of the Apartment Guys. And once again, it is the dudes hanging out. It's not always dudes on the Apartment Guys. I love when it's the Apartment Guys and Gals. It's usually the guys and gals. It's never the apartment gals, because that would involve a guest host. But right. But I'm lucky enough to be joined by Andy McMullen today, guys. And Andy is a fund manager at Legacy Acquisitions. He's focused on partnering with world-class operators while delivering white glove service to its investors. Andy values his long-standing personal relationships with brokers, operators, lenders, private equity firms, and he's orchestrated over $750 million in commercial real estate transaction over a 20-year career. And so Not a billion yet, though, huh, Andy?
No, and when you think about how long I've been doing it, it's not really that impressive take,
No,
but
dude,
I'll
that's
take
way
it.
impressive.
A
That's
lot of wounds, right? A lot of bruises that I can help people maybe
Hey,
avoid.
that's a lot. That's a lot of doors. That's a lot of transactions. So, Andy graduated from UCLA with a degree in economics and is on the board of advisors for a number of top flight companies across the U.S. He's active in many community and national organizations. And when not searching for deals, he's home in my birthplace of San Diego, California, with his wife and 3 kids. How old are your kids, Andy?
Yeah, I got a 10, 7, and 4. So the boys 10 and then 2 girls that got me wrapped, man.
You've got your hands full.
Where did you grow up in San Diego?
I did not grow up here or in
Okay.
there. Actually, I'm here is Salt Lake City. I actually grew up in Cincinnati, Ohio.
Okay.
Yep. And but I was born. My dad was a Navy guy and out on Coronado, and so I was actually born on Coronado Island.
That's awesome, man.
Yeah, fun stuff. So Andy, a little bit more about you. Are you from San Diego originally?
Yeah, actually, I'm from Ventura County. Grew up kind of a
Mhm.
small area around Ventura County called Oak Park. It's a little bit larger now, kind of a small town feel. I think before I arrived, while I was there, actually as a kid, they were still busing all of the people to other towns, Thousand Oaks, Simi Valley. So kind of grew up two teachers, spent a lot of time, telling me not to be a teacher, really, because they knew it was tough row as far as financially. And I think always early on, I kind of had that entrepreneurial bug. The same, you probably hear all the stories of the selling lollipops and,
Mhm.
paper routes and all that stuff, right? And so when I finished school, I knew that I was going to be doing something in business. I wasn't sure if it was real estate. I kind of liked real estate. I didn't know a ton about it other than kind of watching my parents lose a lot of their money in 93-ish. But in any case, I kind of lucked out. A buddy got me into this real estate kind of boutique firm, which had property management and brokerage and asset managers, and owned a number of kind of boutique office and industrial buildings. So that's kind of how I cut my teeth, man. And
Oh.
really started on the brokerage side, and then kind of realized I wasn't, I was fine, right? I was just fine, but I
Mhm.
wasn't loving it. And just fine's not really the way to go through it all, right? So I wanted to be kind of on the other side, started investing in small things, and then kind of evolved into development, and now we're in a fund, which I never thought would have ever happened. So
That's
that's a little
awesome.
bit about my background.
Cool. So pretend that I don't know at all what a fund is, because I didn't until somewhat recently know exactly what a fund is in relation to a multifamily model, right?
Yeah.
But yeah, help my listeners kind of understand what you mean when you say you do a fund now.
Yeah. So there's a couple things. I mean, there's different kinds of funds. There's deal by deal funds. There's traditional funds. So just to kind of give people a little bit of understanding. So we have what's called a built to rent fund.
Mm-hmm.
And what we're doing is we're investing in horizontal apartment communities. So that would be like, single family residents right next to each other, and we manage them like a multifamily project.
Got it.
So in order for us to kind of acquire more and more, we'll go and we'll find additional sites, acquire something in the Southeast, and then in a third project in the Southeast. And all of those are pooled together. So the same terms, the same kind of returns that we're targeting would be in those 3 projects. So you get a little diversification as opposed to, a single deal, which may be a home run or maybe a flop. So that's kind of what we're doing. And we still love multifamily, and we still do one-off deals. This is just something that we thought we could maybe raise a little bit more money for, right? So that it's more fluid, since we've got some. So that's kind of part of the reason we put it in a fund.
What do investors who invest in the fund like about it? Why are they attracted to it?
Well, I think people like diversification. I think people like the idea that we're vetting operators, and they kind of understand our system on how we're doing that, and so when we have kind of a certified deal that we like, they feel like we've probably done a lot of due diligence in it. So I think that there's people, as you know, Tate, they don't care about it like we do, right? Like they want to invest their money passively. They want to return. They want to be able to ski with their families or hang out with their kids. Like they just want a good, decent deal with a good return, right? And so I have a blind spot for that, being in this game for a while. Sorry, I don't know how this turned on. I think my wife's trying to print something. Oh, babe, I'm on a podcast. I told you. Anyways, you can leave that in.
Live radio here.
Yeah. So, I had a blind spot because, I've been in this business, and I think people like to talk like syndication, fund, and what does all that mean? IRRs and returns. Most people don't care. Real wealthy people even that don't care. Business owners that look over their P&Ls daily. They don't care. They want to know, is my money going to get back to me?
Yeah.
And will there be some, company in their returns along the way? Yeah.
Right. So, and so is it you that they're investing in at the end of the day? They obviously, or is it the asset? When are they pulling the trigger, do you think?
I think, my feeling, and I'm sure you probably have got a taste of this because you've been in quite a few deals now. I think people invest emotionally first, don't you? In many cases, we'll just now send out a 2-page teaser, with just the facts, ma'am. And then we'll put like a deal deck or, a link to, all the other data. So I think it comes over time, know, like, trust, obviously. And then Whitney Sewell likes to add loyalty, which I think is really important. So it takes a while for that kind of circle, or what would you want to call it, in his case, a square. It takes a while for that kind of cycle to evolve. So those are the kinds of things that, I think most people care about. And then, I had to raise money, Tate, before, and I haven't done raising specifically. Some cases for many years I was doing operating, and other people would raise money, but before the Jobs Act, it was just about how can you create a relationship with somebody, go and meet with them, talk with them on the phone, provide value, know about what your kids were doing, like that consistency. That's how you kind of create that loyalty. And so, if there's somebody that's kind of young in this business and they're thinking, well, like, what can I do? Like, there's no reason you can't go to conferences and network with people, and you can't become a connector. Like, you can't go to Tate and say, hey, look, I have an idea of what you need, but let me just see, is this it? And then they call up Andy and say, hey, look, why don't you guys connect? I mean, anybody can do that, right? And so I think that's kind of the most important piece that I like to tell people. It is about the relationships, as trite, as simple as that sounds.
Yeah, my listeners are probably getting tired of hearing me say this, but guys, go to these conferences. Like, seriously, go to the conferences, these national conferences that have, 400 to 600 people there, something like that, whether it's Jake and Gino, Michael Blanc, Rod Cleef, real estate guys, I think, have one. I mean, on and on and on. There are, Corey Peterson has a good one. There are some great events and great networking events that you can go, and like Andy's saying, make those relationships and meet those folks that can really help you move the needle. This is a relationship game, and it's a conversation game. Relationships are just a series of conversations, right? So it's just a matter of having the right conversations with the right people, and knowing, like you said, Andy, checking in with a good syndicator that is doing deals, currently raising funds for deals, right? Or currently closing deals, checking in with them. What do you need? How can I best help? Right. And usually it's going to be, with me, it would be like, well, first and foremost, we are always sourcing new capital sources. So if you can help with that, great, let's do this. That's a really great place to start. And you can really get a great kick in the pants sort of startup at, I met one of my current partners at Michael Blanc's event 2 years ago, and we're doing tens of millions of dollars of deals together. And I love her dearly. So we're just, it's a great match. And so, go to the event. So takeaway number.
I've heard you talk about it, but I just think this bears repeating, because if you want to simplify it down, it's one connection away, right? And my friend Ellis Hammond's mastermind, we talk a lot about that. It is one connection away, and you just got to show up. I think I met my partner, and as you know, Ruben Greth, I met him at Jerome Meyer's conference, right? That was the first time it was a virtual, but that's just kind of where people are. I tell my team all the time, like, we're a tweener, right? So we're in that kind of 1 to 2,000 unit range. Mm-hmm. And so we've got a lot of warts, right? Like we've got back-end systems, we've got, we got integration problems, we've got capital raising that, maybe comes a little bit easier now than it did before, but there's still, I stress over every capital raise. Mm-hmm. But are you telling me that you couldn't come in and help and you utilize, I believe in coaches too, but there's people that want to, throw $10,000-$30,000 and hope that solves the problem without doing the work. Like there's plenty of guys like us that can use, underwriters and marketers and, integration systems guys. So there's a place for everybody. I just wanted to kind of reiterate what you were saying.
Yeah. I mean, one of the best ways to get involved is to, find a team that's getting stuff done, getting deals done, and finding out how you can help, how you can contribute value. And again, like knowing your superpower, we talk about that a lot here. That's key, knowing what it is you can bring to the table. And look, hopefully it's within the realm of one of two things, either finding deals or finding dollars, and bringing the two together. And if you can find a way that one of your natural superpowers can fit into one of those two endeavors, and really click and leverage that superpower to get those two things done, like that's where that's where the majority of the GP percentage ends up, quite frankly, is in the people that find the deals and the people that are finding capital and bringing capital to the table. So what
I wish I would have learned early on, it's kind of adjacent to the point that you were making, is that a lot of the smarter, kind of older, wiser people were just dumb on some things, right? And that's like probably the biggest gift that I could give my team, is that there's just some things I'm just dumb at, and they're thinking, well, if he's dumb at it, then that means I could do it, right? So I think that people kind of get stuck in their own head a little bit about, oh gosh, I'm just not very good at the marketing, and I'm just not very good at talking to people. I understand all of that, but there's a place for you you can lean into and really help, and you're going to understand the nuances a lot more than some kind of these experts that want to have a take on every single thing that you're doing. Forge your own path, use your own instincts. So anyways, I just want to get that out there, because not that I'm dumb. I don't want to get that out there. I don't want people overestimating the powers of the experts.
Yeah, absolutely. And look, this is a team sport. Like, we're a mastermind. We're in a mastermind with Tim Bratz, and we love Tim, and everything about Tim is awesome. It seems like, anyway. I'm sure he's got his stuff as well, but he, almost $500 million in assets, and 35 years old, and has done it all in the last 6-7 years, and et cetera, like just really kicking. He's got a great team, like a really, really good team. And not only does he have a good immediate team, like partners, but he's got really great staffing. And then he's got this really great inner circle of people that he works really, really close with on, like his attorneys, his HR guy, in our case, it'd be lenders, property managers, brokers, like your key players, right? Like that's your power team. And this is such a team sport. And in a lot of ways, I think I kind of feel like my job is like, the CEO, so to speak, of Greenlight is a lot of times just coordinating resources and getting the right people with what they need, or getting needs met through finding the right person and the right set of people, or right company, or this is really entrepreneurship is so about your resourcefulness, right, Andy? Wouldn't you
No
say?
doubt. It's
Yeah.
funny, you kind of have the cycle, right? Where you're like, oh man, I want to, I'm just the low man on the team and I'm doing all this stuff and doing all this stuff. And then you kind of cycle through and you get like a little bit, maybe you get a VP role or you something else, and you kind of ascend. And then really when you get to the kind of COO or CEO, you're really down here again, right? Because you've got to lead from the bottom up and try and deliver resources to other people, right? Like figuring out a way to serve your guys. You just mentioned it, the right people in the right seats. So, I think that the team, part of the reason I really struggled, I think, Tate, with being kind of a broker is that there was like a lone wolf kind of transactional way that you were kind of doing deals, right? And you could have teams, so et cetera, but you were just paid once, right? And then you're on to the next deal. And you never really got the kind of feel of, hey, man, I would love that energy of Tate. I love that energy that he's bringing in. Maybe I want to be accountable because I know that he's doing his work and he's getting to the office or whatever that is that is your thing. So the team part of this just can't be understated.
Yeah.
Because those that don't do that, they don't last in multifamily, and those
No.
that are played too close to the vest usually don't last very long in multifamily because there is kind of this serving mentality. Now there's bad actors in every business, right? But I do think that there's a cultural a multifamily cultural kind of relationship with how do I serve this guy or connect this guy or see him win, or see him ascend,
It is part of our culture. I think that it's amazing to me. It's one of the reasons I love this space so much is that it's a very abundance minded space. The big players that everybody knows in the space are out to help other people. And certainly you are, Andy, I know, certainly I am. That's why we do this podcast, is we just want to bring as many people along for the ride as possible. And whether that's doing your own thing or partnering with somebody like us, or dozens and dozens of other fantastic world-class operators, like that's what it's all about. So okay, so you guys got your fund going. And by the way, are you working with Ruben on the fund?
Yes.
Yeah.
Yes. And so
What a
we've got
treat that must be.
we've got three funds now. We've got a multifamily fund, basically multifamily storage mobile home communities, right? And then we've got the built to rent fund. And then the other is kind of just an SPV that we're going to be doing for specific deals, right? So and I'm sure you've talked a little bit about those. I don't want to, I always wonder if I'm boring audiences talking about funds. Like, do they really care that much about funds or not?
If people understand how key they are. So basically it's the alternative to a fund is you're raising funds for every project that you do one at a time.
Yep.
And so, you've got a 60 unit you put under contract, and you're out, you need $1.2 million to get it done. And you're out pounding the pavement and raising capital, and you're showing people a pitch deck for that property and talking to them about how that property is going to perform, target rents, returns, etc. Like Andy says, ultimately a huge percentage of investors don't really care about that stuff, but they want to at least see it and know that it exists. But at that point, you're vetting the deal, right? So Andy, talk a little bit about, you guys and your process.
Yeah. Sure.
And what you're looking for in, sponsors and operators in deals in particular. How specific is your criteria? I've got all kinds of questions around that.
Yeah, absolutely. No, I'll just talk a little bit about it and where it kind of comes from. It kind of emanated out of me being an LP in deals and thinking, gosh, in the last 12 years, if you were in a deal, kind of, basically, winning's the best deodorant. You were going to win if you were in a deal, right? But you're probably not getting the reporting that you deserve. And for me, I would have this, maybe open the deal and I get a couple reports and then, hey, we're selling this project. And I haven't heard from the guys from, in months. Right. And so I think that we decided is we really want to see it. Like, we want to see what an operator is doing or how they've kind of executed on the deal, from the operating memorandum to the private placement memorandum to how they sent out their subscription agreement to what's the portal look like that they've got, what's the first report that they've got, when are they sending out their distributions, right? So and most importantly is, and it's going to be wrong, right, because no deal is, but what's the variance? Where did we say this property was going to be, and why is it so much better, or why is it so much worse? What happened along the way? So those are the kinds of things, and none of them are hard. None of them are, are hard in and of themselves. But I'll tell you, I remember what was hard was me being a sponsor and an operator and having to sit home on a Sunday and pull all the reports from everybody and try to put a letter together, right? That sucks. It sucks. And that's why if you don't have the systems, that's going to be the last thing an operator wants to do. He's already got your money. Now he's got to go execute on the deal and find the next one, right? So that's kind of like some of the steps that we take, so we'll go through, multiple conversations. We want to have conversations with the asset manager, exactly what's the process like. It might be a video call. If they've got an SOP, I think that's a big help. I think to young operators and sponsors, if you can really hone in and figure out a way, there's a couple of young guys doing it really well now. Has Steve Chan, and have you had them on? Steve Chan, I can't remember the name of their fund, but
yeah, no, I know the Real Estate Disruptors.
Yeah, Real Estate Disruptor.
Yes, I have not had him on, but I would love to. Yeah,
because they've got their systems in place, and they don't have as many deals as we'd like to see. But in a situation like that, we say, hey, look, maybe not right now, but keep sending me your stuff, and like clockwork, their reports keep coming out, their emails keep coming out, and I guarantee that those guys have a credibility, even if those investors aren't opening it. They know that it's there, and that those guys are consistent, and that those guys are going to bring value consistently. So that's kind of what we're looking for. So in a perfect world, we'd have, somebody that exited. We'd have, somebody that basically has been through a cycle or two, that has, a certain amount of doors, but that's not all possible, right? And so there's younger guys I've invested with my own money, that I just feel like they figured it out, and they had some strong mentors setting it up. So those are, I probably droned on too long, but those are kind of some of the things that we looked. If there's anything you want to dig deeper on, let's do it.
No, that's a fantastic overview. So okay, so and then what about asset type? I hear what you're looking for, syndicator wise, sponsor wise. What about, do you have specifics with asset types?
I mean, we like to be over 100 units. I would say that as a result of us doing this for a while, one thing we do, I think, pretty well is partner well. Another one I mean by that is, once we're in a deal, we're on the board, we're not trying to cause havoc. We want to let people do what they do. We care about the long-term relationships. We want to have multiple deals. So as a result, I think that we are seeing good deal flow, because there's, various partners that we've got that they'll bring us some stuff and say, hey, take a look at it. It seems like it's in your wheelhouse. But mostly for the multifamily stuff, Tate, we're, 100 units. We like them to be secondary, tertiary markets. B, maybe we'll do some C if it's the right fit. Kind of like to have some kind of, additional hook to it, a story. We were invested in the Winston-Salem deal, and what we liked about that particular deal was how conservative it was on the break even, and how balanced the community was, and what we could do to really deliver a resident experience. Like, that's a big deal for us. So with everybody we invest with, we want them to have like, in Winston-Salem, we did a deal with Apartment Life. So they're kind of a faith-based organization. Are you familiar with them?
Yep.
You know, with this deal, we're going to be building out the playgrounds, you know, our built to rent development. We've got 6 done. Got the playground, the dog park, the community setting, and then we're going to bring in a group to do kind of movie night. So like we want people that are doing good. Like that's what's important to me, and that's what's important to our team. And so some investors say, you know, why are you using my return on, you know, Apartment Life or that playground? You don't need it. This community doesn't need it. And I always pinch back, even if you didn't believe in that stuff, it's for a better community. It's for stickier tenant. It's for better reviews. It's for, you know, just a better overall investment, right? And so so those are kinds of things that we're big on. We can't get all of them, right? But that's one we have to get.
Residents' value perception is everything, right? But they're feeling about what you're providing them in return for what they're paying you every month, and rent is huge. And retention, when you get into operations, guys, and like we spend a lot of time talking about acquisitions, capital raising, investor relations, you know, due diligence, et cetera. But when you get into operations, those little details really, you know, they really add up. They really matter a lot. And you know, every swing of $5,000-$10,000 on your NOI is worth a lot of money, hundreds of thousands of dollars in your value. So, you know, so those operational items are huge. And when you can bring a swing set or a dog park, both of which are very low cost items, right? Or a dumpster enclosure to make people feel like they don't live with piles of trash around them, stuff like that. The value goes up, and people's feelings about, like you said, the reviews go up. That matters. Word of mouth referrals go up, and retention goes up.
Yeah, I mean, like one of the early deals we did, I remember doing kind of a favor for a tenant by like, I don't know if you've invested long enough to remember those days where like, hey, just put your, you know, get a tenant who's like a contractor, a handyman or something, and, you know, reduces rent and he'll take care of your property, right?
Mm-hmm.
That doesn't work, right?
Right.
Like I could give a couple $100 off, but when I get it back, it's going to be trashed. And so I did that. I got it back. It was trashed, and they were upset at me because I had to move them out, right? Because I had to sell this place. So, you know, there's something about having a relationship with this. These are these people's homes, you know, and they leave work and they come home to this place. Like, wouldn't it be great if this place, you saw the kids and you knew the names of the kids playing in the park or whatever that is. And so, you know, with our built to rent stuff, it's brand new, but they're still young families. And so they've got an opportunity to make bonds with people for life. Anyways, we just try to keep that in mind. And I know a lot of people do. We're not the only one. And most of the time it's not even us. If we're just raising for it, you know, we're basically investing in the horse anyway. So in the jockey, I should say. I won't call them horses.
Well, I'll be a horse. I don't mind being a horse. If you're going to invest with me, I'll be a horse.
Okay. You're my horse, man.
Yeah, for sure. Cool. Right on, Andy. So first of all, love Ruben Grath. What an awesome treat it must be to get to play with that guy on a regular basis.
Oh, I gotta say, man, like, you know, when he left, I found out kind of through the grapevine. I was like, I just had to get Ruben Grath on our team, and I didn't know if I was going to convince him or not. It was he could do his own thing, right? He's got 45,000 downloads on his podcast. He knows everybody like you do, right? This is a powerful medium that you guys have. And so I just thought, man, if I could get somebody helping me with marketing, because again, you know, my raising capital was about, you know, kind of pre-Job Act, just get on the phone and hustle and call people. Like, we didn't have the automations in place, really. We've got some lead capture, but I thought, man, a guy like that could really kind of come in and help us grow this business in a big way and help a lot more people. And so, so anyways, that's another thing that basically was one connection away, right? I had met him, And then we kind of cultivated the relationship, and then we're in a couple book clubs together, and then just over time we're building this relationship that now I know what his skill set is, and we can put it to work in order to kind of help our community and help our team. So he's been fantastic, man. So I know this is not Ruben's show, but
no,
you brought it up. So
shout out. Hopefully he'll listen. If not, I'll cut him a custom clip and send it to him or something.
Yeah.
But okay, so what do you guys see happening here? Like, what are you building, and do you have a target? You have goals, like,
yeah. So
what are you growing into?
For the big one is I want to be involved in transforming 40 communities in 4 years. That's my goal. That's where I think we'll be about 5 this year, and so hopefully we'll be 7 next year, and 10 to 12 the following. So that's kind of like that's my like big mission. Where I see things going is I'm seeing a trend, not that multifamily is I mean, it's still the most favored asset class, but what I'm seeing a lot happening now is that Wall Street is getting into this single family kind of horizontal multifamily asset class. And so you got CalPERS now, because everybody's looking to find their bond yields low, right? So they got to figure out where can they find yield. So if they're not good at finding stuff, but like small developers like us can find it, build it, and then they'll come in and take over 1 to 200 units. So that's kind of where I see a trend, and partly because we haven't been building for years, right? Everybody's kind of scared since 2008. So we haven't been building in years. Now we've got, we're up to 3.5, and I've heard my numbers a little bit low of unit demand, 3.5 million unit demand. I think that somebody told me I was about half of what it really is. But if you think about Wall Street kind of controlling multifamily, it probably has control of about 55% of the multifamily market, guys, trading investments, CalPERS, pension funds, insurance companies. We're in the very, very early stages on this built to rent thing. We're probably in inning 1 of this thing, as Adam Stern likes to say, because the institutionals only own 2%, right? 2% of single family, built to rent. Most of it's kind of scattered, which is really inefficient. So that's a trend. I think there's a couple of arguments to be made that A class is where you want to be. You're seeing growth. You're seeing growth, and certainly in those kind of 4 or 5 caps you mentioned it earlier. If you can reduce your expenses by $1 or increase your rent, your returns are 18 cents on your $18 to 1, as opposed to kind of some of these other markets where it's maybe 5 or 6 cap.
Right.
But I do feel like there's been suburbanization going on for a while, and I do feel like there's a lot of opportunity in those kinds of, we think of like Winston-Salem as kind of a suburban, like a tertiary market. So those are things that I kind of see trending. And some people would say it's been happening for a little while. But the other thing is millennials right now are probably priced out. So there's still a lot of need for housing. And the empty nesters, right? Like I think they're probably better candidates for our built to rent type stuff, because they like to have everything done for them. But you could argue that if you're going into a nice apartment where you got a pool and the rest of the amenities and all that, there's demand for it. So I'm curious. I know it's your show and you get to ask questions, but I am curious to kind of see where you think things are going, and maybe you don't have to take longer than a minute.
Jeez. Okay. The most, the most authentic answer I can give on this in terms of the overall housing market is I really don't feel like I know. I'm too specific into what we're doing, which is class C, C plus, B minus assets, existing multifamily, usually built in the 60s and 70s. We're trying to move up into B class, but we're really hyper focused on 2 specific markets, Oklahoma City and Columbus, Ohio. And so I spend 100% of my time immersed in anything that's going to affect asset class, right? Like workforce level housing in those markets. That said, what I will say about that is you cannot build these assets for what we're buying them for, like not even close. The cost to build is so high right now. And so we're buying Class C assets below replacement cost. They are a finite asset. There's only so much of affordable housing out there. It's a very finite resource. And unfortunately, it's very difficult to build new and have it be affordable, or at least as affordable as like a Class C apartment at $500, $600, $700 a month. Yeah. So that's my feeling, is that we've really niched into an asset class that's going to really hold a great value through just about any economic condition, and hopefully any weird event, right? Like, and knock on wood, cross your fingers, everything else, you just never know. But I feel like we've mitigated and basically all the speculation by, I don't look at anything outside of those two markets, Andy. Mm-hmm. Like, something comes across my desk that could be probably the best deal in the world and like one of the best markets in the world, like a Charlotte or, something like that. And, in Austin or whatever, like I won't even like entertain spending time on it. Number one, I don't have the time. Number two, I don't begin to have the time to properly know what I need to know about that market to do that deal justice and to do it well. And so we're just not interested. We love the inventory that we're working with, and we love the markets that we're in. So unfortunately, I don't have a bigger picture answer than that right now.
No, that's so good, man. I think like that's you serving your investor, right? You want to know every transaction that happened in that neighborhood. Who all the owners were. Who did own that before. The trends. All of that. The cost of all of those things are. You almost have to have kind of a knowledgeable level. It's got to now be nuanced, knowledgeable, where you've got, pieces of the area that you can kind of divvy up, and that, that's not supposed to be a 50, 60, 70,000 a door because it's going to cost so much more in this particular area. That's right. For us investing in the South, the reason that we're able to get kind of lower cost is that one of the areas that we're investing in, impact fees are low and development costs are lower, and the land is less expensive, and we're kind of building these really stick-built, cookie-cutter, nice cottages, but relatively inexpensive to build. But I'm not hearing many people at all find things to develop outside of that area, unless they're, California, and they just want to take a flyer on whether they can just have it appreciate over time.
So so you're in the South doing the build to rent model right now?
Yeah, we're in Lafayette, Louisiana on our first one, and then we've got a couple of other sites already identified in Baytown, which is Houston area, and then kind of upper Louisiana, which is Gonzales, and those will be nicer communities where we have to probably have the clubhouse and pool. But yeah, and then Texas for some multifamily, San Antonio. Yeah. And we've liked Columbus, man. So we're gonna have to talk more about it. We've just kind of, at one time we looked at something that made some sense, but we just weren't like you said, we didn't know enough to know what we don't know, right? Yeah. We don't know what we don't know.
Yeah. So. Yeah. You try to minimize that as much as you can, and having really good specific market knowledge is one way of doing that. So, well, awesome. So capital raising in general, just overall take on it. Like, you and I are having drinks at a mastermind or whatever, and somebody comes up to us and doesn't really, know what you do and whatnot. Like, what would you say, and what would you say if that person showed a lot of interest and said, how do I get involved?
Yeah. So what I would say is, you have no idea this number of sleepless nights you're going to have during a capital raise, and you have no idea the number of conversations that you're going to have. So the energy that you need to be able to summon has got to be there, because you're talking to these investors about the same thing that you've talked about 10, 15 times, and you're going to have to, you know, present it in a way where you're interested in what their goals are, and that you're not tired about talking about what you've been talking about for months. I know a lot of people are going to say, hey, no, Andy, it's all about the automation nowadays, right? You got to get your, you know, your funnel set up, and, you know, your lead capture and all of that. But yes, that's in service of getting on the phone and reaching out to people, and having people in your community know what you do, and having your doctor that you know has money know what you do, right? Hey doc, I appreciate you really helping me out. I've got this new project. Is there anybody you know that might be interested in, you know, investing in real estate? I mean, there's tons of communities that you could tap into right now. Flippers, that's another one, right? Flippers, sometimes they're just flush with cash and they need, you know, a negative K1, or sometimes they're just fed up with the kind of propulsion of it, you know, that like, hey, I want to have some passive stuff and multiple streams of income. So I will talk, you know, I'm gonna do a summit. I'm gonna do a summit on capital raising Friday, I speak. But I really want to drill into kind of the process part of it. So I want people to kind of understand the process of how you set it all up, but the more important things, like, what are you saying to these investors, and how well do you know your stuff, right? Like, well, we've got a capital raiser group or call, like, I'll take my first deck in underwriting and I want to have them look at it and tell me everything that sucks about it, right? So by the time that I've got investor calls, like, we fielded hundreds of questions, you know. When we've done webinars with frequently asked questions, we have a sense of what's coming. Like, I bet you get on calls with other either fund managers or investors, and you know what questions are coming, and you know the ones that you probably didn't know maybe years ago, but you would have, you know, an answer like that to it, right? So those are some of the things I would really want people to know. That again, it comes back to the relationships. Bang bang, here we're drum again. But you know, you've got to, in order for them to have that loyalty, they've got to know who you are, and they got to know of you. And people would say, you know, the trust part is the most important part, maybe. But if you want to get known, you know, if you want to get investors to begin to trust you, you gotta be out there meeting it. What about you? What would you say for capital raising if we were talking? I mean, I know that you're focused more on the operation, but you got to raise capital for your deals.
No, we're raising capital all the time. We're just as focused on that as anything else, and we're super committed to our investors, like, and our residents. Those are our two groups that we love and adore, and who we couldn't be doing what we're doing without. So we're in service to them. And, you know, I would say this, like, first of all, you guys know a lot more money than you realize and that you think. Like, think about how much money you think you have in your circle of influence, your sphere of influence, and probably quadruple that, and you may be getting somewhere close to how much money there really is in your circle, like in your immediate circle. And then you add a degree or two of separation. Holy cow, like, there's a lot of capital out there. There's a lot more capital than there ever has been out there that needs a good place to be. So, like, raising capital, make sure, like Andy said, everybody needs to know what you're doing, right? And that you have these opportunities for people. And if it's not for them, it might be for somebody that they know. And then I would say, look, these digital meetup groups, that's how Andy and I met. Like, you know, that's how we know each other, is through a virtual and online national meetup group that people just come and play at high levels and network at high levels and talk about, you know, getting deals done, what it takes, like, you know, where are you stopped? What do you need? What resources do you need? Do you need a deal? Do you need capital? Do you need partners? Do you need sponsors? What do you need? And that's, if you come to those places from a place of how can I serve? How can I contribute? How can I help this person get to their next level? Like, what are they trying to get done? Man, magic stuff happens when you do that. So I'd say those two things, man. You know, take what you have, take what you have now, maximize that, and then take the opportunities to network and grow and maximize that.
And ask for the referral after you take good care of those investors. Now you go back, you know, that's kind of the Dan Hanford talks about, like the kind of know, like, and trust triangle. And by the time you get to the, you know, past the known, past the like, and to the trust, the next kind of wave in between that trust and going back to know is this referrals, right? That you're constantly getting these referrals now because people trust you. And so if you say it the right way, hey, look, you know, is there anybody that you think might be interested in something like this? Because there's a fine line, right, to Tate, between you're helping them with something that you know could help them.
Yeah.
Right. But then you also do not want to be dismissive of what they help you do, right? What investors allow you to do. Right. So, you know, there's an argument to be made that, hey, look, I'm just showing this guy something. I don't, you know, couldn't care less if I got him or I didn't get him. But we know that's not true, right? Because that's how we're able to do what we do. So I think that those are kind of just things to think about as you're talking to these investors.
Totally. Yeah. And again, just the service thing, if you are coming from a place of like transforming communities, like Andy, you used that word earlier, and I love that. Investors pick up on that. Like, this guy's really authentically out to make the world a better place, at least a little bit at a time, by taking a larger apartment community and making it cleaner, safer, better lit, you know, more desirable, more of a community, more supportive, more developmental for kids, safer, etc. Like all of those things. That's what we're up to. And that's like big stuff. And it's not something that to be taken lightly. It's a responsibility. It's a big responsibility. And, you know, side note, luckily enough, there's people out there that aren't doing that at all. And they're creating opportunities for people like us to come in and do it right. And to help people and get better, help people's lives get better, help investors grow their portfolio, their wealth at the same time. And it's such for me personally, and I can tell for you, it's really a joy to get to do this. And
I mean, I can't tell you. People. So, you know, I can take a little credit for it. All we did was raise a couple $1 million, but my partners over at DeRosa Group, when we bought this property in North Carolina, you know, you mentioned the opportunity that some of these landlords are leaving for us. You know, I wouldn't go as far as to call him a slumlord by any stretch, but he had put a bunch of money in the interiors, and the exteriors were sad, right? There's the broken down playground, and the pool is a pond, and you got, you know, the basketball rims are knocked down, and, you know, there's not people in playing in the yard or the park because, you know, the trees are covering everything and breezeways are dark, and it's just not a safe environment. And so in a short amount of time, Justin Frazier and his crew were able to get out there $60,000 worth of tree cutting, so you could see it from the street. You know, you got, you know, officers there now, so there people are feeling safe. We had tons of skips, which for people who don't know, just, you know, decided to leave their keys on the counter and just leave, you know, they're out of here. And that was great for us. But what I'll tell you now, the reason I bring up that story is because we sat at our last board meeting, and I'm reading the notes. There's kids playing outside. Like, that means something, that there's a 300 unit apartment building that these guys' homes, and they couldn't go outside because they didn't feel safe. That's a big deal. So I want to shout out those guys, because they've done something pretty incredible. Whether people, you know, think that it's self-promoting or whatever, that's fine. Maybe it is, but it might inspire somebody.
Yeah, totally, dude. Yeah, it's good stuff. And people doing it for the right reason. So Matt Faircloth at DeRosa Group. So
Matt Faircloth, Justin Frazier, Hervé Francois. I want to give them all a lot of cool. And Megan Lampe too, who's also our partner on that, and she's the one that kind of brought in, you know, she brought in Apartment Life, also Ramsey Plus. So all the tenants that want it would have kind of an interactive, you know, personal finance tool. Not, and this is not, we're not just talking about an app. It's pretty expensive stuff, but
Wow.
we've got licenses for people. So
Wow.
those are the kinds of things like that makes a difference if you can pull it off.
Sure. Sure. Any other fun tricks you've done for residents?
Well, I think I told you a little bit about the kind of movie night. And we started doing those in our neighborhood, and everybody shows up, right? Like Goonies, the movie doesn't hold up very well, but like the kids love it, and parents love kind of having the barbecues before and after. Yeah, I mean, I think all of those things. What have you guys done? I'm curious about some of the things that let's steal some ideas from you guys.
Yeah, you know, honestly, we're still pretty new to being in operations at large scale, and our communities are still pretty newly under our ownership. But at the one that we've been cycling through and have owned for a year and have improved, really we just improved amenities, and we were putting 23,000 a unit into the interior, so we're decking them out. But a dog park and a playground and some picnic tables, and just some basics, a nice area to play in that's got some nice mulch chips and a play set and whatnot, bike racks.
In our built to rent community, we just put it, we're going to put in some doggy doors, just the ones that are already kind of attached to it, because most of the built to rent is they're going to have the backyard and they're going to be dog owners, and 70% of that asset class, the residents have dog. So things like that, like we don't need to, obviously we could just go buy a couple at Walmart or whatever and put them in, but I think that's something that people think is pretty cool. It doesn't cost us that much, in our construction, but that's something that people appreciate. So if they don't appreciate it, it's fine. But we'll feel good about ourselves. I guess we could selfishly feel good about ourselves.
Well, that matters too, right? So what, just curious on your build to rent products, how big are they? How many square feet, and what do they rent for?
So it's 100, we actually just dropped it 97 because we had some spillover. So it's 97 single family, 1,200 square foot, 3 bedroom, 2 baths, stick build, all of the same exact layout. And then the elevations on the exterior are different. So the porches might be different. The roof lines might look a little different, but people like the backyard, and then we'll manage it like, an apartment building. So just think of it like, multifamily pulled apart.
Yeah. Love it. And do you mind me asking what rents are like? And
yeah, sure. No, I love talking about this stuff. I mean, it's kind of my new thing where I'm like, I'm just so excited about where this could go, how we could build this out with communities and how we could build out more and how we can kind of get our systems going. But the rents for that particular, it's going to cost us about 80,000, probably about 125 all in. So horizontal, $125,000 a door all in, horizontal and vertical. And our rents will be in that, I think they're at 1,600 now. So the market cap there, we can kind of deliver a 5-year projection, even though we'll probably get out when we stabilize it. So, but then like Gonzales, that might be 1,900 for rent, or Baytown might be a little bit more, right? So it just kind of depends. But our criteria is they got to be next to a good school, they got to be next to amenities, and they got to be near a major highway, right? And so getting those with low impact fees and a community that's developer friendly, that's not always easy to find, right? And you got more competition now, although I think we're trying to fly a little bit under the radar, meaning that those guys they'd rather have guys like us build it and build bigger, right? So
I love it. I love the model. So it's 1,200 square feet above grade, right? All one level.
Right, all one level.
That's so smart. Wow. Cheap cost
to
build.
Shout out to my partner Derek Alexandrenko. He's fixed it. He's figured this out before even a lot of the Wall Street guys figured it out. He's been doing it for a while. He's got about 50 projects under his belt. And when he came to me with the idea, I was like, come on, man, residential, right? It has like a connotation to it. I don't want to get back into like, single family homes again, but
Right.
This is pulled apart, man. We're marketing this as one entity, or they're all individually platted. We could just chunk them down to sell them to small investors at 10 or 20, however we decide to do it.
So
anyways,
incredibly smart.
You got me started, man. You asked the questions. So,
I love it, man. I could geek out on that for a while, but that's great. Well, maybe we'll have you back in a little while, and we'll dive just into the build to rent model and
Anytime,
kind of deep dive that one.
Anytime.
Andy Mac, appreciate you, dude. This has been fantastic.
I really appreciate it, man.
Yeah, just a great wrap, and Ruben's been a buddy for a while now, and I've known you, I've known of you, we've crossed paths, but this has been a great getting to know you kind of session, and I really enjoyed the jam.
Yeah, man, and I appreciate you bringing it, because I know you're probably dealing with some troublesome, cumbersome conversations earlier, right? But you just bring it, man. Like I just think the audience should know that you show up, right? Like they should know that despite how you feel, you showed up.
It's just attorneys, man. It's nothing too bad.
Right, but they sometimes suck the energy out of you. I love our attorney Dugan. We got Dugan Kelly, he's a great attorney, but yeah, sometimes there's a lot to it, right? Reading into those details. Yeah. So I did leave my phone number up, because I'm here to serve. If there's anybody that wants to reach out and ask about what we're doing, or ask about how I can help them, referrals. We love making referrals and connections. And then we've got some resources on our site, legacyacquisitions.com.
Legacyacquisitions.com, guys. Andy McMullen. 310-920-2441. Number will be in the show notes and on the YouTube screen as well. So on that, Andy, thanks, brother. Appreciate you.
Brother. Appreciate you,
man. And listeners, appreciate you guys. We'll see you next week on another one. Take care, everybody.
Thanks for listening to The Apartment Guys with Tate Seamer. Tate and friends are grateful to have you as a loyal listener. If you like what you've heard, please subscribe, rate, review, and share with friends on your Apple Podcasts, Google Play, Spotify, or any other podcast platform. Also, check out Tate's YouTube channel for videos of many of these episodes and more. Until next time, take massive action steps and rock on.